This is Frank Servo. We're going to talk about a stock, Bank America. Today's October the 12th, 2017. We're going to talk a little bit about our trading key system. It's a system of method for trading stocks, commodities, and ETFs, and Forex and the like. The system is designed to keep you trading with the predominant force of the market action. A trader has three choices to make money in the market. One is dumb luck, and the other is having enough money to dominate the market in your direction. Now, few people can do that. But third, the traders with the highest probability, with the predominant forces of players that have the strongest belief and enough money to enforce that belief, are the ones that you want to follow. The trading key system is designed with zone collars. It's a color-coded directional system. It's also based on a probable positive expectancy. In the bottom zone of the chart, on the far left around September 5th, we see a brown zone. And the brown zone represents our trend. Now, this can remain brown for a period of days, weeks, months, or several months. But we're starting this to where it's going out of one trend and going back into another trend, into a buy zone. Now our system is designed with a brown at the bottom, which represents the strongest trend, the predominant force. It's also designed with a top zone, which is also brown. The great thing with the trading key system is that it will keep you trading in the direction of the trend. It will not take any buy orders. As long as the bottom zone is brown, the top zone is brown, you put a conditional order on. In this case, it'd be a short condition. And that short conditional order is retained within this box. And once that order is triggered, your order will be sent and filled. Now we have in this condition to trade below a daily resistance, which is a resistance, and below a daily support point. Now once the sellers penetrates price below a resistance and a support, that's considered a transition point where the sellers are outnumbering the buyers. Now we also see that we're below a dark brown line, and that is a monthly resistant line. And we also see we're below a red line. That is a weekly resistant line. So we're below 3 sell points and a buy point. Now each time period of interest, monthly, weekly, daily, and even all intraday time periods, we have 2 lines on each chart in each time period. One of these lines represents a support and one represents a resistance. We call them buy points and sell points. Now, the concept is to trade below more sell points to enforce the belief of sellers. And we're going up as a buyer, you want to trade above more buy points, trading with the predominant force. Now you see lines on the charts. These lines do not move. They're not like a variable, which can move in price, unpredictable, twitch and turn throughout the day. They remain the same. It's like a line where a decision needs to be made. It's where a belief is established. It's where people find the edge to establish a belief, whether to be a buyer or a seller. And once this price is penetrated below these sell points, and also this is a gold buy point for the monthly, it shows the strength in the market. But as the market goes down, we have a combination of not only entries that we can use with our system, but also a combination of exits. In this particular case, if you were selling daily resistance and knowing that you was trading the predominant force and you was buying daily support, your daily support would come over and down, and when price jumped up, and you do notice it gapped at that time, below this line, your exit would be at the open when it crossed above the green line. Now, again, it found strong buyers for that to penetrate the two line because it made a transition point from buyers to sellers. Now, as price went up, it did not trigger at that time because we have stronger conditions built within the system to keep you trading with the predominant force. So in the next bar we see a blue zone. Now the blue zone represents the predominant force of buyers, the strongest belief with the consensus belief of buyers in the market. Now at times you will see a white zone. That white zone is a period of indecision. It's a time when price is between a buy point, which is this, and maybe a sell point, which is a resistant line, or it could be the weekly. So it's a period of indecision. It's not always a change in trend. Sometimes it's a pause in trend. Again, we see a white zone. The trend is up because it's blue. And as long as the trend is blue at the bottom, even though it's white, that's a pullback. That's a pause in the trend. It's catching its breath. It'll pull down, find enough buyers to penetrate the next higher high. Now, as you see, we're trading above the daily support, daily resistance, and we're now trading above our monthly support. Now, that's a strong support line to trade above. And at this point in time, we're trading above what was once a weekly resistance. That means we're trading above a previous high. Now, once you travel or price goes above that high, previous high, it's always good to put a stop right below it, just in case price changes direction, comes back down. It's a way of protecting your profits. But we also have built-in exits to take care of that as well. And you see price going up, penetrating the monthly. This was the weekly line. This is the monthly resistance. So now the buyers are stronger than the sellers. We're making a transition point above the weekly. Now we're making a transition point above the prices above the monthly support, monthly buy point, and monthly resistance or monthly sell point. So now we've pretty well proved that price is strong enough to continue in an upward direction. So as price goes up each day, this is a support line, price will advance. And we're trading above a weekly support, a monthly support, weekly resistance, monthly resistance. So we're trading with a strong belief. Now, as price goes up, it stalls, and you see the S over the red line. That's a place for an exit. That's where a couple of different things may have happened at that point. One is maybe players are starting to exit their position. Maybe they just want to take profit. Maybe they feel the market is overbought. Some players are lightening up on their position possibly. The third thing, players that got in the market late, maybe they got out. Maybe they got in on this bar and price starting to retreat against them. They're getting out. And the other place is, it's a low risk entry. When price comes down and you see the blue zone at the bottom, the blue zone at the top, and this is your intermediate trend, the top zone at the top. So you have a strong trend, intermediate trend, and then your entry box. So it'll pull back and it gives you a nice entry back into the trade. Now, our condition was to buy above daily support and daily resistance because we're wanting to buy strength. Now, we could have this program to buy strictly support, but we like for the market to prove itself. However, it did not penetrate the red line, which is resistance. But the next day it gapped up, and when it gapped up, it was proof that there's strong enough buyers to penetrate support and resistance. So that was a transition point for buyers in the daily chart. So what we have is a combination of time periods coming together. We talked about the monthly support resistance, the weekly support resistance, and the daily support resistance. What we're doing is looking at a microscopic view of the market activity onto a microscopic view. We're trying to put statistical odds in our favor for success. We're trying to also improve our reliability of our trades. Now, as price opened, it gapped and went up, and you see another sell. If you had this system and you said, I'm going to buy support, sell resistance, that would have been your exit. Again, a white zone. You put another buy on, another entry, B, buy. So price goes up again. Again, you have a sell, but it's above support line. So it still has buyers in the market. It hasn't dominated those buyers. Now, as price goes up, it penetrates the buyers and the sellers, which is a support and resistance, and it goes up and it goes near the high. Now, at this point, it fails to make a higher high. So there's weakness in the market. When it fails to make higher highs and higher lows, then the resistant line that we're looking at, price will penetrate that. What we're trying to do is buy higher lows and higher highs, higher lows and higher highs. But sometimes the market fails to always buy higher highs and higher lows. Sometimes it might make a higher low but not a higher high. So in that case, price retreats against the resistant line. And this is price pulling back against the daily resistant line. Now we have the weekly resistant line, and tonight is Thursday. So whenever the market opens tomorrow, most likely price will be below this resistance, will be below weekly resistance. Now, this is the previous support line for the weekly support. Now, I'm not trying to predict price, because one thing we can't do is say how price is going to open tomorrow. That is an unknown. No one can tell you how price is going to be opening tomorrow. But the only thing we can do is base with the information we have with statistical odds and the knowledge that we acquire by learning a system and method of trading that's based on a probable positive expectancy. But when the market opens, it might come down and touch a support, and that's a number at 25.19. If there's some strong buyers there, price might bounce off of that line and pull up. But if the sellers outnumber the buyers, they'll most likely push price down below this line. And if price penetrates that line at 25.19, then it may have a tendency to continue down to find the next support, which could be the monthly, and that could be at 25.04. At that point, there should be enough buyers in the market to hopefully stop the market from going down. It may bounce around there for a while. It may bounce between a support and a new resistance. So as we wrap this up, I would like to leave a couple thoughts in your mind that what we're trying to do is change the old mindset into the new. The trading key system is about an uncommon way to wealth. So we're trying to teach people how to trade and trade with confidence and eliminate the fear. So I'd like for you to visit our website at tradingkeysystem.com, and also don't forget to subscribe to our channel. Happy trades.